Sunday, May 6, 2018, Monaco 64, home of alternative economics and contrarian views. Before I go on to the main subject today, I'd like to thank everyone for showing up for the live streams. I just started doing live streams and they've gone really well. I'll be doing more. And also thank everyone for their donations, for purchasing the merchandise. I've got the new design for Billy mugs, Billy t-shirts. And yeah, today I'm going to talk about how not even central banks can stop the impending credit crunch. And it's like a part 2 of a video I did on February 22nd. And it was entitled, Not Even Central Banks Can Stop the Impending Credit Crunch. And I'll also look at why gold and silver have been the ultimate safe haven during the 21st century, or since 2000. Some people would argue that the 21st century technically started in 2001, but we'll go with the mainstream definition that from 2000. And why am I talking about the credit crunch or an impending credit crunch? Well, I spoke about it in February, and I saw a very interesting article, which I'll reference here on Zerohedge, and it's from Robert Burgess, and it's entitled, Credit Cracks Are Showing, Day of Reckoning Looms for Corporate Borrowers. Before I go further, though, I'd like to also go through the definition of the word credit, the origin. If you look at on Google Dictionary, I'm not sure where they get it from, but the origin comes from the Latin credere, which means to believe and trust. Latin creditum, Italian credito, French crédit, and then English credit. They started using it in the mid-16th century in England. So it's basically trusting someone and believing someone. That's what the word credit comes from. So let's have a look, continuing this article here about the cracks. Robert Burgess goes on to say, for years the naysayers have been warning about the precariousness of the corporate credit market, an environment where balance sheets have become more and more bloated from excess borrowing stoked by the Federal Reserve's easy money policies. Shrinking bond yield premiums don't make sense. At some point, they argued, there will be a day of reckoning. Yeah, we've been saying this for quite a while. I've been saying it. Talked about it in February. And he brings up something really interesting, and it's called the National Association of Credit Management Dollar Collections Index. And notice how it's dropped so much. So what is this index? So he says here, the folks at the NACM, which is the National Association of Credit Management, aren't quite sure what to make of the big plunge, which could turn out to be an anomaly. What they do know, however, is that credit conditions are getting weaker. As they describe it, the strengthening economy has forced more companies to boost, well, strengthening, and I also put that in quotes, has more companies to boost borrowings to keep pace with their competitors. Now they may be struggling to keep on top of that debt. And it goes on to say, there's a quote here from Chris Kuehl, an NACM economist, and I quote him, it looks like creditors are having more challenges as far as staying current, which may be contributing to the very weak dollar collection numbers. And this is really amazing here as well. Robert Burgess goes on to reference the Institute of International Finance, and he says there may be something to that. The Institute of International Finance noted in a report last month that U.S. non-financial corporate debt rose to $14.5 trillion in 2017, an increase of $810 billion from 2016. And a figure that equates to 72% of the country's gross domestic product. So that's non-financial corporate debt, $14.5 trillion. So The other day I went to buy my new computer, and I went to a big shopping center fairly near where I live called Blue Water. A lot of the UK or people, London-based people will know of Blue Water. It's huge. And you go, I don't go there very often, but you go in there and it's like everything is, you've got everything you need and it's so abundant. And I thought, this is all hanging on a thread of credit. All the big companies that are in that mall or shopping center, the property as well. I'm sure there's a lot of a big mortgage on it, and it's all a veneer, in my opinion, of credit. And as I said, not even central banks can stop a credit crunch, an impending credit crunch. And why is that? Well, because central banks can facilitate, and so can the commercial banks. They can facilitate credit, but if people aren't willing to borrow anymore, if the economy is slowing down and they can't pay, keep the credit going, there's nothing they can do. And credit, just like anything in nature and the economy, we have cycles. This cycle has been one of the longest ever. So I think it's turning, and I don't think this is an anomaly, this National Association of Credit Management Dollar Collections Index. This is probably a big warning. Is it only in the US it's happening? No, it's going to happen everywhere. The whole world is being run on credit. And when it turns, it's going to be it's going to be pretty bad. And I think the other reason why it gets, the crisis get worse and worse, like 2000, 2008, and the next one is going to be even worse, is because we keep getting lied by the central banks, by the banks, by the politicians. They keep telling us that things are doing really well and that there's no problem. They don't look under the bonnet of the car, or the hood, as the Americans would say, to see how much, so to speak, debt and credit there is, that it's not a healthy economy. So, and you get companies that, people that don't listen to people like me and others, the heads of big corporations or big companies, retailers, they believe the mainstream economist, the City of London, Wall Street, they believe the central banks and the politicians when they say, oh, unemployment is really low, everything is great. And they take on more credit than they should, and the Austrians call that malinvestment. So that's what's happening. I think we're very close to it, and not even central banks can stop it. It's just a cycle. And when people, the consumer and companies, see that they can't keep going, they will stop, and they won't take on more credit or give more credit. And the short-term rates rising in the States, the LIBOR rising, that's all going to impact that. So what else do I want to speak about now? Well, about gold and silver, how they have been safe havens and how they've been the investment of the century. Most people only are very frustrated because of the last few years in gold and silver, but and I will also show you why why gold and silver are very undervalued right now as well to the stock market. And I'll go back further from 2000 to 1990. So first of all, let's have a look at the gold chart. And this chart is starts from 0% in 2000, and it compares gold, which is the black line. It compares the S&P index, which is the blue line. It compares the Dow, which is the purple line. And I've put also the dollar index, which is the orange line. So as we can see, since 2000, gold is up 364.4%. S&P, the Dow, sorry, is 121.8%. And the S&P is up 91% since the beginning of the century. And the dollar is down 12%. So, I mean, there's no discussion there. what has done the best in this century. It's gold, and the dollar is continuing to be devalued, and that's devalued, debased, and that's why the 1%, the people, very wealthy people, are always able to protect against currency debasement. But this is why this chart shows why the general public is getting more and more dissatisfied, because their currency has been destroyed. And the best protection has been gold since 2000. Let's have a look at silver now. So same chart, same comparisons. Silver up 215% or 214.9. S&P, Dow, same performance, of course, and it hasn't done well as gold, but it still has protected investors. So I think that pretty much tells the story there. There's no argument. And now why I think gold and silver are actually undervalued, and that we're due for a correction in financial assets. And what do I mean by a correction in financial assets? Well, I mean the stock market, paper assets. So it's the same comparison, S&P, dollar index, and Dow. So the dollar index, so you can see, whenever I say that don't worry about different currencies, fiat currencies, they're all sinking. And you can see the dollar's done nothing really since 1990 versus all the other major currencies. It's only up 0.2%. But the stock market this time, looking longer term, has hugely outperformed. In this case, it's gold here. Gold's still up 200. Let's see, gold is up 226% since 1990. And but the S&P is up 653%. And the Dow is up 782. So and we look back as well during the 08 crisis. We can see how even though gold did correct, the biggest correction was the stock market, and it came and it touched the performance of gold. And then both started reflating together. But since 2013, of course, we've seen silver, gold and silver being kept, how can I say, manipulated. And I think that gap there is so huge that it's going to correct. Either gold is going to and silver is going to catch up, or the stock market is going to correct, or it's going to be a combination of both. But I think yeah, gold and silver are still undervalued, even though they've been the best protection or investment in the 21st century. Pending credit crunch cannot be manipulated. They can't stop it because they can't force people to borrow and spend. They can't force corporations to borrow, to expand if they're not making money and if the economy is slowing down and people can't make payments. Rates are still so low that they can't really do what they did in 2008, like slash rates big time, print a lot of money. They've done that already. They've used all the ammunition. So when that will happen, as always, very difficult to tell, but we think we're getting closer and closer. So if you enjoyed this video, please like, share it. Subscribe to my channel if you haven't yet. You can also follow me on DTube, on Steemit, on Twitter, and I'm also going to try something called DLive. DLive. It's also part of the Steemit blockchain, and you can do live stream there. DLive. I'll try that. And for the live streams, yeah, I'll keep doing that. It's very enjoyable. Let me know in the comments below what kind of discussions, conversations you want to have on the live stream. I'm open to anything reasonable. And yeah, and if you like to donate to the channel, there's some links below in the description. And I'll talk to you later. Take care.